Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Indian equity benchmark surged to record highs, led by a rally in private banks. Jet Airways stands to lose all its slots by Friday after Civil Aviation Ministry says it's meeting all private airlines today to reallocate the slots. US Drug Regulators Establishment Inspector report gives an all-clear to Dr. Reddy's formulation facility at Bachupally in Hyderabad. And a massive fire has ravaged the iconic Notre Dame Cathedral in Paris. No casualties have been reported in the incident. Before we get to all of that, a quick check on how the markets have been faring this afternoon. Yatin is here with a closer look at some of those stock movers. Yatin.
Well, it's a great week, Harsha, and we have seen record highs on the markets at this point in time. The market breadth is also quite good as far as Nifty 50 is concerned. 40 stocks advancing on the Nifty 50 and 10 declining. If you look at today's rally, largely led by private banks, so we have the likes of ICICI Bank and IndusInd Bank. Both of these companies up over 3% in trade on good volumes. They have been the top gainers on the Nifty. Titan, Hindalco and Asian Paints are the other companies wherein we have seen some good buying coming in for trade. Wipro, of course, that stock is in focus. They will be reporting the quarterly earnings as well as considering a share buyback. However, ahead of the earnings, the stock is down 2.5%. Tata Motors, after yesterday's rally, has cooled off 2%. Bharti Airtel, Cipla and Infosys are the other stocks which are dragging the Nifty at this point in time. Of course, we talk also about the new listing, which is Polycab. It is almost 100 rupees plus, to the issue price of close to 550 odd. So, good listing gains coming in as far as Polycab is concerned. Apart from that, we also have PC Jewelers, Jet Airways, as well as Rail Vikas Nigam. All of these stocks quite active on huge volumes. Of course, Jet Airways fell as much as 15% in trade, has recovered some losses, but still 10% down on that one.
Nathan, thanks so much for that. That's the structure of the markets for you. Let's get another voice on this one. You are Bhatt, Managing Director at Dalton Capital Advisors, now joins us on the phone line. Mr. Bhatt, thank you so much for joining in. We're right in the middle of election season. My basic question is, do you believe that these levels are sustainable? Do you think there is more fuel left in this rally?
And two things. One is, of course, the FII flows. FII flows have been dramatically better than what we are used to, especially during March, and even in April it is continuing. So that is the principal reason why the market has reached all-time highs. But in addition, I think the base case, as per the opinion post, because that's the only source of information that we have publicly, it sort of suggests that the NDA government is probably going to come back with the assistance of probably a few more parties. But so that sort of gives a comfort to the market that policies may continue, and there might be further reforms and liberalization, further investment in infrastructure. I think that is what the market is liking, and that's why the market is taking it up. But of course, valuations are a bit stretched, no doubt about that. And also that earnings growth have not really returned in full fury, as we have been budgeting for the last probably 8 or 10 quarters. So that has not happened. But still, I think there's a lot of hope in this.
You alluded to FII flows, Mr. Bhatt. From now to the 23rd of May, does one sort of brace yourself for volatility? Would the markets or have the markets already priced in what's going on?
Well, as far as the politics is concerned, I think the market has priced in a base case, as I described. But if there are some surprises on the way, because as we go along, we'll probably have more news trickling down about how the relative strength of the two formations is. So therefore, I think that will probably add some volatility to the market. But I think if the FII flows continue to be as strong as it has been for the last probably about 6 weeks, I think it might continue the journey up north.
The Nifty is trading at about 18.5 times 12-month forward, Mr. Bhatt. Are there pockets in the market that you find a little more expensive?
I think, generally, even what you're saying, 1 year forward about 18.5 times assumes aggressive growth of probably 23% or something for FY20. So therefore, that is something that we have not seen for quite some time now. The last several years we have not seen. So therefore, there is a huge hope that we will reach the high 20s sort of earnings growth. which is possible for this quarter because year on year the base for public sector banks is very low because they've incurred huge losses in the corresponding quarter last year. So this year they might be turning around, so therefore it might look optically very high. But barring PSU banks, still I think even March quarter the earnings growth might be somewhat tepid in the low teens if at all.
Okay, I have one last question, and this is, even if you look 2 months down the line, economic indicators are relatively sanguine. You've seen the positive monsoon forecast, oil prices relatively under control. For whoever's coming to power, whichever government, are they going to be welcomed by a slightly more positive set of economic factors?
Well, I think the economic factors will probably continue to improve rather gradually. But I think the stage has been set. I think a lot of the hard decisions have been taken by the current government. So therefore, I think we are certainly going to, unless we splurge in a big way and increase the fiscal deficit dramatically, as some quarters people feel. But as long as we continue this path of fiscal moderation and investing in infrastructure and reforming the economic setup, I think things should continue to do well. I think the market should continue to feel sanguine, except for the valuation side.
Mr. Bhatt, we leave it there. Thank you so much, Reddy, for joining us with your perspective. You are Bhatt of Dalton Capital, talking about where the markets are and factors that might lead here on. But besides hitting a record high, the Nifty 50 may be poised for its longest bull run ever. Historical data shows that the rally may also be its slowest. Devina is standing by to explain why.
Well, it pays, Harsha, to know that while today we've made a record high, from February 2016 up until now, which has been this particular rally, is actually going to be the slowest rally. So let me break it down. A bull rally or a bull run probably is defined as a 20% uptick in over a period of time without a break of 20% or a downtick of 20%, which is what a bear market constitutes. So since the inception of 1996, we've had about 8 such rallies, after which we've seen in between sporadically breaking them up periods of bear market. So starting off with 1996, December 1996 to August 1997, a shorter period, 98 positive trading days. Then you had June 1998 to Feb 2000. The Nifty moved about 98% in a stretch, 224 positive trading days. April 2003 to 2004, then May 2004 to 2006, a 170% gain on the Nifty with 291 positive trading sessions. But the more important aspect is going to be these last 3 rallies that we've seen. So the longest bull run that we've seen has been this period. It's lasted about 39 months. Currently, we are about 37.5, 38 months into this February rally. So it's not yet the longest rally or the longest bull run that we've seen, but it's on the way to getting there. But just look at the difference in terms of the returns. We're just about 66-67% on the Nifty, which makes this rally the slowest rally. And I'll come to the average monthly performances across these various rallies that we've seen. So here you have it. The current rally, which started in February 25th, 2016, is giving you average monthly returns of just 1.76% versus some of the other periods in 2003 to 2004, when we actually saw a monthly return of 9.5%. Obviously, this rally was much shorter in duration, but the pace of the rally was much higher. Now, what else is different in this rally compared to the last 2 rallies has been what has contributed to this move. Obviously, while the Nifty is down 66%, the broader market space has not contributed as well. So it's just 50% for the Nifty Mid Cap 100 and the Nifty Small Cap 100. And you've got in this rally, mainly the heavyweights on the index contributing. So financials did well, and obviously the bulk of the financials are in the top 5 in terms of the weightages. HDFC Bank doing 143% in that rally. Reliance Industries holding a weightage of 10%, which added about 184% from February 25th up until now. Infosys not all that much. HDFC Limited and ICICI Bank too. These are the top 5 heavyweights. If you take a look at it, the telecom stocks have not done well. Pharma stocks have not done well. Some of the auto names have been under pressure. So it's not really been a broad-based rally when you compare it to the previous 2 rallies of 2011 to 2015, and even the one before that, when you had the mid caps and the small caps doing 100, 110 odd %. So that's the key differential that we're seeing. So while we're rejoicing the fact that we made a record high today, it really pays to look deep and see whether this has been a more broad-based rally or not.
Devina, thank you so much for putting that in context. The Civil Aviation Ministry will decide whether to take back 209 slots booked by Jet Airways. The decision will be taken on Friday. The aviation regulator is meeting with all private airlines today to reallocate those slots. Bhanvi Arora now joins us on the phone line for more details on this one. Bhanvi, what does this mean for Jet Airways? Are we effectively saying that it could shut down operations by Friday?
Harsha, if all the unused slots are taken away and given to the other airlines, then it might mean that the airlines, that Jet Airways might shut down. But right now, the government is planning to provide unused airport slots of Jet Airways to other domestic airlines. And for this, Directorate General of Civil Aviation, which is the aviation watchdog, has called a meeting with the airlines. There are a total of 209 domestic and international slots of Jet Airways. We are learning from sources that over 25 unused slots have been given to other airlines, and the aviation watchdog will decide for the rest of the slots in today's meeting. Also, the aviation secretary is likely to meet representatives of airlines to discuss the issue of rising airfares and passenger inconvenience of Jet Airways today. And the ministry might take a final call on all these issues by Friday. So, and also remember that on Friday, last Friday, Home Ministry and PMO held a meeting with the aviation secretary to take a stock of the whole situation of Jet Airways.
Okay, Bhanvi, thanks for that quick details. That's Bhanvi Arora from Bloomberg Quint in New Delhi. The likelihood of Jet perhaps having to shut down operations by Friday is very much on the anvil. The meeting of the Aviation Ministry is taking place. Meanwhile, lenders holding back 1,500 crore funding promise in the resolution plan. Jet Airways is unlikely to get its operations on track. Sources tell Bloomberg Quint that bankers are afraid of prosecution, similar to what followed Kingfisher Airlines' collapses. Vishwanath Nair is standing by to give us a sense of, what's the latest on this front and what are bankers apprehensive about?
Well, Harsha, clearly the Kingfisher case is the primary source of apprehension for the lenders. Basically, in 2017, the Central Bureau of Investigation, they arrested senior officials at IDBI Bank, including the former chairman of the bank. This was followed because back in 2009, about 10 years ago, the bank had given about 900 crore worth of loans to Kingfisher Airlines, even though the company's underlying financials were not strong enough. So the CBI alleged that this was a fraudulent transaction, that the bank did not follow whatever credit guidelines that were supposed to follow to extend this loan. Now, bankers are scared that this is going to, we're going to see some sort of a repeat in Jet Airways' case if they were to infuse this 1,500 crore worth of loans on an immediate basis. So there was a meeting that took place yesterday among all the lenders. There was also some representation from the pilots union to SBI seeking these funds for the company so that it can get back on track, at least temporarily continue its operations. So if you remember, when they had initially announced this 1,500 crore fund infusion, they had said that this money would be used primarily to pay employees as well as some of the vendors so that more planes do not end up getting grounded. Okay. But that did not take place, of course, and we are about 3 weeks since then, and planes have been consistently getting grounded. What we understand from statements made by the Civil Aviation Secretary is that only about 6 or 7 planes are still flying, and the airline is operating on a skeletal operational level. It has stopped all its international operations for now. It's only flying domestic. All of these are issues that are serious for an airline's future. Right. Now we understand that there was a meeting earlier today at Jet Airways, an emergency board meeting to discuss what can be done to protect the airline in the event of no funds coming in from banks. There are some news reports out there right now saying that there might be some kind of a temporary shutdown. We don't know that as of yet. We have not been able to confirm that ourselves. But it is important to notice that if it does not get these funds on time, it will not be able to pay for fuels, it will not be able to pay its vendors, and it will not be able to pay its employees, and that just means that its operations are going to get impacted deeply.
More news coming in. Naresh Goyal is said to have withdrawn his bid for the airline. Ridhima Saxena is on the phone line to tell us more details. Ridhima, what do we know?
So one of the sources confirmed to us that Naresh Goyal has in fact withdrawn his bid for the airline. However, the meeting got concluded at 1 o'clock in which the board and the management of Jet Airways was expected to bring out all the financial and operational details on which they were supposed to take a decision on how the interim funding or a temporary suspension of the airline would work out. There is still no official confirmation. There is word that the meeting is over, but we are still waiting for more details to emerge on whether there will be a consideration on the airline being temporarily shut down till they get more clarity on who would be the investor that will come and bring more funds to the flight.
Okay, interesting development there. Ridhima, thank you so much for joining us with those details. Ridhima Saxena reporting there, but that's bring up the Jet Airways stock for you. Two important developments. Naresh Goyal has withdrawn his bid, and there is a meeting going on at the Aviation Ministry, and they're talking to other private airlines as well to see if the slots of Jet Airways can be reallocated. They will take a final call on Friday. Meanwhile, there isn't too much clarity from the lender side as well whether emergency funding will be given to the airline. So wait and watch. The stock is moving at this point as we speak. 10% down in trade today. Jet Airways for you. US drug regulator has given an all clear to Dr. Reddy's formulations unit at Bachupally, that's in Hyderabad. Darshan is standing by to help us understand what this means for the pharma company.
Yeah, it's sentimentally positive because what had happened was that in February this facility had gotten a Form 483 with 11 observations. Many of them were repeat, and that time the counter had corrected significantly. Now that time, a lot of analysts came out with notes indicating that there will be enough time taken to get this plant cleared. It's an important plant. 40 to 45% of the US sales come from this plant. There is no financial impact because given the fact that businesses as usual, there's no suspension, there's no import alert, just that the future provisions or future filings will not happen from that plant. But they have actually reduced their filing significantly from their plant. Only 10 to 15 out of the 100 pending ANDAs are from this plant. But nevertheless, the timing at which Dr. Reddy has been able to manage to convert their plants from problematic to solved, that's something that the market likes and the analyst community has liked.
Darshan, thank you for that. So Dr. Reddy's plant in Hyderabad. Wipro may fall in line with its larger peers to post a muted growth in the March quarter with continued pressure on margins. Agam is standing by with what the market is pricing in for Wipro's numbers today.
Well, Harsha, markets are pricing in about a 2% growth sequentially in its IT services revenues, and that is going to be largely in line with what we've seen with respect to TCS and Infosys as well. Coming down to your operating margins, we're expecting about a 20 basis points contraction to around 18.2%, and that is likely to lead to some weakness in profitability as well. We're expecting a downtick of 0.8% on a quarter-on-quarter basis. We do know that it has been a fairly volatile quarter when it comes to banking and financial services for TCS and Infosys. Even though TCS has seen considerable strength, Infosys really hasn't. It's seen a contraction, and it could just turn out to be a challenging one for Wipro too. But when it comes to manufacturing, retail and healthcare, we're expecting mixed performances for Wipro for this particular quarter. We also could see a little bit of an impact of appreciation of the Indian rupee against its operating margins. When it comes down to your guidance, well, that is going to be a key watchable. But as far as this quarter is concerned, we're likely to see Wipro report towards the higher end of the guidance. And finally, coming down to the buyback, which is perhaps the more important factor to watch out for. We are expecting the company to announce a buyback of anywhere between 11,900 to 12,000 crores, and this could lead to a buyback of equity of over 6%. And the company has enough cash on its books to have flexibility when it comes to its buyback. But on the whole, we're keeping an eye on numbers which could be subdued for Wipro for this particular quarter.
Agam, thank you for that. We'll watch out for Wipro today. Polycab wires and cables, meanwhile, listed at a premium of more than 17% today. The country's largest electric wire maker says it's hoping to improve its margins in the coming years. Yatin spoke to the group CEO R. Ramakrishnan and started off by asking him about its current business model.
Today we have a unique business model. 80% is sold through distributors. 35% of our business is B2C. Our dependence on B2B is just about 15 to 20%, and our exports are at about 5 to 6% of our revenue. And I think with this kind of a business footprint, we are well placed to be able to ensure good stakeholder value in the future.
Okay. You said that you have been able to improve your margins, over the last few years or so. Talking about your margin performance moving ahead, how do you really see your EBITDA margins? Because you have been investing into distribution, into newer products, into newer facilities. Of course, there are setup costs relating to that. But on a normal trajectory basis, what is the targeted EBITDA margin range that you see moving ahead, given the fact that your product mix is changing and probably consumer electricals could be a bigger pie for the company moving forward?
7.7% was our cable and wire EBITDA in FY14.
Okay.
And cable and wire EBITDA in FY18 was 12.7%. So in 5 years, we improved our EBITDA by 5 percentage points. That is a very important improvement. Because our consumer electrical business is just 4 to 5 years old and we are in the investment phase there, that EBITDA margin was at about 3.3% for FY18. So the blended EBITDA was at 11.7%. First 9 months EBITDA is standing at approximately 13.7%. I am not offering that as a guidance for the future. I am only trying to say our focus is on revenue growth, market share gain, distribution expansion, building the brand, and we will do all of this while driving our gross contribution up. With a higher gross contribution, our absorption of overheads will improve, and as a company, we will be getting greater market share, greater shop share, and greater brand share. I think that is our mantra in terms of our success.
That's the management of Polycab after their IPO. Election seasons when broadcasters hope to make the most from advertisements, but this time it's a bit different. It's a mix of numerous on-demand video platforms and the new TRAI norms that seems to have thrown the industry in a bit of a disarray. Sajid is standing by to tell us how the ecosystem is looking and what has really happened.
For the new tariff order, there has been a drastic change in the way viewership has changed for all channels, especially English. If you look at from a broadcaster's point of view, there has been a viewership fall of nearly 10 to 15% across genres, except in 1 or 2 genres where you have seen new launches coming in. But on a top, all India top channel spaces, which is across genres, we've seen a few trends coming in. One, people are not willing to go for pay. They're satisfied with the free-to-air channels which are coming to them, because the RA now mandates that at 130 rupees, a cable operator or a DTH operator has to provide 100 free-to-air channels, and many of them have all the genres in them. And so they are happy with the kind of 100 channels which they are getting in. But at the same time, they are seeing a clamor now to be part of the FTA channels, because that's hitting the viewership. Now, if you look at the BARC impressions which have come in for the 52-week ending 2018 and week 14, it shows drastic changes happening in the way viewership has been seen. In English genre, it has been a virtual collapse of viewership which has happened, especially in 6 megacities, which account for nearly 79% of the viewership for that genre. And that's primarily because a lot of traffic or a lot of consumers are now migrating to digital OTT platforms like the Netflix, Amazons, or the Hotstar.
So you're talking about English entertainment genre?
Yeah, English news, English entertainment, English movies, and English business news. All 4 genres have seen drastic drop in viewership. That's primarily because this is the first genre which will move first to digital, and in the top 6 megacities you have better infrastructure with respect to broadband and internet connectivity.
Correct.
So you are able to, the consumers are moving to that instead of paying top dollars to the cable operators, because many of the channels are priced at the higher end of the price band for the consumers. So they're willing to go with the basic free-to-air channels, and whatever they want, they're looking at on the OTT platform. The same can be said with some of the indie entertainment channel as well, where we have seen free-to-air channels getting top billings. For example, in the entertainment space, you have on an all India basis, you have a channel called Dangal, which was nowhere in the top 10, now being a number 1, number 2 there. That's primarily because now DD free dish is playing a major role there. Now, what used to happen was Star Plus would have been pay on other platforms. It would be free on DD free dish. Now, the regulations does not allow free and SD standard definition to be bundled, or SD or HD to be bundled, and broadcasters can't put selective pay and selective free for
on different platforms.
Correct. So they have moved out of the free dish, as a result of which some of the free-to-air channels have got higher billings or viewership, because people are satisfied with the kind of free-to-air channels which are coming in. And so you have some of those channels coming in. There you have Dangal, Big Magic and all. Sun, which used to be the number 1 in terms of all India cross genre viewership, is number 3 now. Z had 3 channels in the top 10. Now it has only 1 in top 10, which is Z TV. Z Anmol and Z Maha, I think, has gone off the top 10 list. So that's one thing which is coming in. In the business news space, you're seeing again contraction happening, with the leader itself losing 50% of the viewership, which is CNBC TV 18. You have BTVI, which has opted to go free to air instead of pay, and that has led to BTVI getting some kind of viewership there, and so some kind of ranking which between ET Now and BTVI is coming in, which is there. Interesting trend which is coming in the Hindi news space is this space is entirely free to air space, with Republic Bharat coming and expanding the market there. But Aaj Tak, which is a pay channel, remains to be number 1. The viewership hasn't moved much for Aaj Tak, and that could be primarily because of the stickiness of its consumers who want Aaj Tak too. So they're willing to pay for Aaj Tak and make sure and be part of the bouquet, but then may not be the case for other channels, because we saw News 18, which went pay, reversing his decision to go free to air. So so there is a lot of churn which is happening there. English genre, for fun, it has collapsed. We're seeing some of the indie entertainment also in the urban markets coming down a bit because of some of the OTT apps like Z5, or for that matter Alt or Eros now coming into play.
Interesting that hugely the industry is in a bit of a disarray. Thanks, Ajit, for that. India is said, meanwhile, to have cut its trade deficit with China by $10 billion, the most in more than a decade. Bloomberg's Shruti Srivastava joins us with what she's picked up on the situation. Shruti, India seems to have made the most of the US-China trade war.
Yeah, exactly. So India has been able to cut down its trade deficit with China by $10 billion in the last financial year 2018-19. Now, this is the maximum trade deficit, the cut in trade deficit with India has seen with China in almost over a decade time. Thanks to the ongoing trade war between the US and China, India has been able to successfully push for its exports to China in several products where US was supplying to China. Products like marine products, plastic raw material, cotton raw material, and grapes. Now, these products were being supplied by US to China, and after the trade tensions started between the two economic powers, India has been able to push for its exports to China. Trying to capitalize further on the trade tensions between US and China, India is also trying to drive a hard bargain in several areas where China was initially reluctant to yield to India. Now, in products like rice, pharma, grapes, which had been pending between India and India and China for a long time, India has successfully managed to get market access in China. Going forward, India is trying to get further market access, enhanced market access in products like pomegranate, okra, banana, and soybean meal to make the most of the trade tensions between US and China.
Shruti, many thanks for joining us with those details. Shruti Srivastava from Bloomberg News reporting from New Delhi. A massive fire ripped through the iconic Notre Dame Cathedral in Paris last night. The incident has destroyed the 850-year-old monument. Take a look. Following the fire, French President Emmanuel Macron announced a national fundraising campaign to restore the Notre Dame.
Cette cathédrale, nous la rebâtirons, tous ensemble. Et c'est sans doute une part du destin français. Et le projet que nous aurons pour les années à venir. Mais je m'y engage. Dès demain, une souscription nationale sera lancée, et bien au-delà de nos frontières. Nous ferons appel aux plus grands talents, et ils sont nombreux qui viendront y contribuer. Et nous rebâtirons Notre-Dame. Parce que c'est ce que les Français attendent. Parce que c'est ce que notre histoire mérite. Parce que c'est notre destin profond.
Out of time on the show. Thank you so much for joining us. Stay tuned to Bloomberg Quint.